President Trump says any country that buys oil or gas from Venezuela will pay an additional 25% tariff on all trade with the United States. This so-called secondary tariff will take effect on the 2nd of April, which Trump has described as Liberation Day. US stock markets are sharply higher on Monday, but investors are still cautious before that tariff deadline next week. Well, let's talk to Marc Ostwald, who's Chief Economist and Global Strategist at ADM Investor Services International. Good to see you back on the programme, Marc. So what do you make of this latest move on tariffs from President Trump? What's he hoping to achieve?
It is basically putting maximum pressure on countries like Venezuela and indeed Iran to basically try and basically make the life very uncomfortable for both regimes. It's another example of how trade tariffs are being used for purposes which are actually not really that much related to trade, but more to geopolitical and other issues.
Well, it seems that something new comes out on tariffs from President Trump almost every day. He's again talked about this 2nd of April deadline, Liberation Day, as he calls it. What's Wall Street making of all this?
Well, there is definitely some relief that it is going to be primarily reciprocal tariffs. It's going to be quite targeted rather than wholesale. So the worst fears that have been there are not, for the time being, one should stress, being realised, and that has provided some relief. I think there's also been, one has to be a little bit careful with a lot of the moves that we've seen in equity markets over the past month, because some of it is, it's been reaction to tariffs, but it's prompted rotation trades within the equity market, above all out of the US into Europe on the back of the German government's moves to take infrastructure spending and defence spending out of the government debt brake rule. But you get these rapid swings from one part of the market to another, whether it's intra-sector or intra-continent or intra-country. And then it's basically very sharp moves of the pendulum, and you find a lot of people now today basically looking at the valuations in the tech sector in the US and saying they're too cheap, and in Europe basically looking at Germany saying, well, all well and good, but there are a lot of other constraints like German planning, like labor skills and production capacity, which will present challenges to their plans. And so you suddenly get a swing back in the pendulum in the opposite direction.
So as you point out, lots going on over and above tariffs. We have had this word flexibility come out in recent days, so haven't we, in connection with those? You talked about US markets, you talked a bit about European markets. What about Asian markets? How are they responding to what's going on? The Asian markets this morning were not really quite as enthused as the US markets. I think in part it's because within certain parts of the Asian markets there are countries which, particularly the Fragile Five group, which includes in Asia, India and Indonesia, which run fairly large budget deficits and have substantial trade deficits. And there is concern that in a heightened trade tension environment that they will suffer because, a lot of their economies basically depend on exports. So, yes, I think Asia at the moment is basically, it's benefited certainly from some of the swing away, but it's now really waiting to see what exactly is going. There's a lot of promise from China in terms of doing things, but will that actually turn into increased trade, or within Asia, which should remain less vulnerable in theory because it's been growing for quite some time to all the tariff wars, or will the vulnerabilities in terms of the exports that they have to the US, particularly in countries like Vietnam, actually create a lot of headwinds for trade. So it's a very fine finely balanced situation. And I think really that's why Asian markets to some extent are taking stock. It is also, I should stress, not a unitary picture across Asia. It's really quite divergent at the moment.
Well, Mark, good to talk to you as always. Thank you for coming back on the programme. Marc Ostwald from ADM Investor Services International.